doing DeFi, greatest in the world, and they finally about to see why. What you know about XRD? I'm smart money, I ain't never on a decline. What you know about NFTs? It's not just Ace, when you finally gonna realize you need scalability, need more utility, then you better call on these guys. I'm going radical, I'm going Radix, I'm going radical, I'm going Radix. Hyperspeed DeFi, never on a decline, building the future, I feel like a savage.
Hello and welcome. I am Piers and Juan-David, CEO of RDX Works, a core developer of the decentralized finance protocol Radix, a public ledger entirely focused on bringing DeFi into the mainstream. This is our podcast, The DeFi Download, a show about decentralized finance and all things crypto, where we dive into the details of the projects, assets, and services that are powering the DeFi revolution. Today, I have Juan-David Mendieta, founder of Keyrock. Keyrock is a leading market maker whose mission is to enable the adoption of tokenized economies. It trades on more than 85 exchanges and across more than 500 markets, doing billions of dollars across those markets. Juan, David, it is wonderful to have you on the show. Thank you for coming.
Thank you very much for having me. Glad
so
to be here.
It's great to have you. Great to have you guys on. I think we've been working with Keyrock for a while now, but I thought that it would be a really interesting conversation because you guys, yourself, you've got a really interesting background. I think Keyrock's doing some really interesting things in the space, and I wanted to sort of like kick that off. But let's start with where did your love of crypto come from?
Well, look, the company, based in Belgium, headquarters, now very international, offices all over the world. But even though I live in Europe, I myself originally from Colombia. Right. I don't know if that's something that I told you before or not, but growing up in Colombia, I think you realize the value proposition of tokenization and the whole digital asset movement in a very different way that you would when you're in Europe, correct? For me, it was not only the fact that I had that background, but I was fortunate to come from a family where my family was greatly responsible for monetary policy in my country. And as such, growing up, the conversation at the dinner table was all about the interest rates of the central bank and the money supply and production in the country. When I stumbled across Bitcoin, for me, it was very clear that it was not only a means of payment, but that it was an alternative economic model. And it just attracted me, the idea that you would have a different principle to the central bank model, which I understood very well at the time.
So you had, your family with a long history in sort of central banking. What was it about, like, Bitcoin? Obviously, it wasn't just that it was an alternative economy. It was that there had to be something better or different about it that attracted you to it. So how did your model of what, and it's an unusual model, right? Most people don't have an inside track to how central banking policy works and how central banking, like it's sort of like it's the other to most other people. It's like for, if you're an everyday person, it's almost like it's in a completely different world, even more than the banking system. The central banking system feels completely remote. So like, what, as someone who comes from a central banking family, worked in central banking yourself, like, it's fascinating to see how you map that model across to what Bitcoin was.
Yeah, look, the thing is that it honestly, and I don't remember exactly how my thought process was at the time, but it definitely kickstarts a lot of questions, correct? Like, when you yourself study economics, the view from the economic school is very, very much a doctrine, correct? Is this basic idea where there are some principles that they are not to be challenged. Like, inflation for an economy is good. A little bit of inflation is good, correct?
Right.
And when you start understanding inflation is bad, correct? Like,
deflation is bad, so inflation
terrible?
Is good.
Inflation is
those are the inalienable truths. You don't question them. You
don't question that, correct? But a bit too much inflation is also bad. It needs to be under control. 2%. That's the idea. Why 2%? Nobody knows, but it's 2%, correct? And then you start thinking, okay, what is it so terrible in not having this thing? Is it really that bad if we don't consume, or that we have in the urge of consuming all the time? Interesting. But then continues kind of like in that way, correct? You have all of these idea of how a market should run according to Keynes, which is kind of like the economic model where majority of the systems are based.
Right.
And when you compare it to Bitcoin, it does not follow that model, correct? So,
Right.
And that was kind of like the basic idea, which is it works in a complete opposite way to what is being told to be good. And then when you realize that the alternative could also exist, you start thinking, okay, what does that mean? And you realize it's interesting. Maybe it's not bad. Maybe it can work.
So my model for this has always been quite complicated. So I'd be interested to sort of test it against you, right? Which is that store of value and fiat are not quite the same thing. And so for a store of value to be deflationary, that's good. I want a store of value that fundamentally is going to have a way in which that value is not going to be depleted. But for fiat currency, you have a bunch of extra concepts in it, such as debt. And if I have a deflationary asset and I have a debt in that deflationary asset, suddenly the debt is a lot more expensive, because instead of setting the interest rate on the debt, I'm now going, well, I'm borrowing something, but the thing that I need to pay back tomorrow is going to be more valuable, and the underlying asset could be quite volatile. So how do you model those two? How do you model those two requirements against like a fiat system versus like a Bitcoin-based hard money system?
So it's a super interesting question. I mean, I've had my own opinions on this, so this might actually be a little bit radical. But if you think about just the purpose of fiat money, correct, which is a means of exchange, like the problem that is trying to solve, or the value proposition that is trying to solve, is as old as time, correct? You have one asset, I have one cow, you have one pig. You want my cow, I want your pig, but the cow is a little bit more expensive than the pig, correct? Like I need to give you the cow plus a little bit of something, which is in this case the means of exchange, correct? Like I need to give you a little bit of something. Sure. Yeah. And we live in a world where, unfortunately, we cannot just exchange things for each other in a very simple way. There needs to be a center value, correct? Now, we can challenge that idea. We can even go farther than, we should replace fiat for Bitcoin. We could just go to the point where you say, why do you even need the exchange asset? Might not be needed, correct? You could potentially live in a future where everybody has all of their value in assets, and we have a layer system that is capable to exchange any value for any value in a way that you don't have to think about it. Think about this. This is very, very stupid example, but if you imagine you have this pair of headphones and I bought them, correct? There are like millions of these stupid headphones around, correct? Right. Imagine they would come with an NFT that is easy transactable, and you could know how much they're worth. Yeah. And I just give them to you, and then you can either give me something else, whatever it is. And if that could actually happen at scale, I could have all my savings in equities, in commodities, in crypto, and in assets that all have a digital representation. And every time I interact with you, every time I go to the shop and I buy something, I just literally exchange value for value instead of value for a mean of exchange for value. Yeah. We can get rid of the mean of exchange altogether if everything is seamlessly integrated as digital assets.
I'm not. It's going to take some time. So it's an interesting concept when you're thinking about. So I think this is a really interesting debate. I'm gonna take the other side of it. So like I'm gonna throw a couple of things in. I like it. First thing is what do you get paid in? Right. I want to receive my salary in the most fungible, the most universally accepted representation of value in the economies I care about. I don't want to receive it in equities. I don't want to receive it especially not in the company's equities, right? Like I want to take some risk on the company, but not all my risk on the company. So I want to take it in something, and therefore pay is a question. The other thing is that the other purpose of money, I mean, there's three purposes of money that are held out, right? It's like unit of account, means of exchange, and store of value. The unit of account one is the one that is the debts. And that's actually how most of the world works. Like, if you think about payment terms from a company. It's not, I give you this pig for this cow. It's, I get these services and in 30 days or in 60 days, I pay you for them. And like most of the world has some concept of units of account, has a time concept in the value exchange, where the value exchange doesn't happen immediately. You go, oh, this is going to happen now, and at T plus X, this other thing is going to happen then. And, you know, that's for that in trading, we talk about that as being a bad thing. Settlement, exchange and settlement should happen at the same time. You know, that's why things like blockchains are good. But if I'm shipping something around the world, that starts to be a bit more problematic.
But it's a problem that only exists because the practicalities of solving it are annoying. But if they were not, I mean, again, like you say, okay, you want to receive your pay in your traditional guy. You just want to get some dollars, correct? So you imagine you could walk around with your wallet in your forehead and you have something that says, I want dollars. I want dollars, correct? Yeah. And I am walking around with a wallet in my forehead that says, I pay in Bitcoin and I want Bitcoin, correct? You're going to deliver a service to me and we want to agree on the amount it is, correct? Sure. Let's say I say I want to pay to Bitcoin and you want to receive dollars. So you can check, okay, how much is that in dollars? And I say yes or no. Even if I get paid in 30 days, you could actually lock in on a smart contract a forward. And you don't need to understand what is a forward, correct? Like you don't need to understand the complexity of what's happening, but you could just lock in. The only thing I need to know is I'm going to get paid X amount of dollars, $10,000. And the only thing I want to know as a Bitcoin holder is I'm paying you half a Bitcoin. I don't want to know anything else. It's like, this is what I'm paying. We agree on it today. Independently, we don't even need to discuss it, correct? I'm just going around saying, this is my rate, this is my rate. Yeah. Now, what is interesting is that I could also say my rate is a diversified basket that contains crypto, equities, and commodities, and everything that I get paid gets paid in that basket. So you just walk around, means of account. I say, I want to deliver the service. And in your UI, in your forehead, you said you're willing to pay half a Bitcoin. The other person gets a message that says half a Bitcoin means 600 aggregated tokens. I don't need to know what that means to you. I don't need to know what that means to you, correct? I don't need to know what it means to you.
Yeah.
And then we make the deal. There is a forward that happens on a smart contract. I deliver my consulting service to you. In 30 days, you pay me. And we both manage to exchange value and have means of account and means of exchange without the need of anything else, except that most probably in the backend, there is some sort of bridge asset to manage the liquidity pools, whatever it is, correct? But the reality is that asset could be whatever. Like it's just whatever people want to put in the liquidity pools.
Right. I mean, I think this is a concept that has sort of like pervaded through crypto for a long time. I mean, even Bancor's first model, right? Their original ICO was around this idea of everything. You just need a universal way of exchanging, right? But
are you aware of what they're working on nowadays?
Yeah, it's Carbon. Have you seen Carbon?
Amazing.
Oh, amazing. It's so good. It's so good.
I love it. Big fan. So I had many conversations with them about it. It's basically going in this direction, correct? With Mark,
Mark is like one of my favorite people in crypto. He's amazing.
So when we look at this, correct, and the more sophisticated these technologies become, and the more sophisticated our means of accepting value and exchanging value become, and automated, and this is what I'm excited about, correct? This is where it's going, where, like you said, like Bancor, they were leaders on this industry inventing AMMs, correct?
Right.
Fair enough. I think they were a little bit too early because the industry was not ready to accept that the exchange asset was not dollars. The industry was just not there, correct? Right. Might be that in the future, once everything starts to be tokenized, it could actually work, honestly. I think their initial idea had a lot of meat, yeah? But now we go into this new version that they're coming out, and this looks good, huh? I mean, this stuff is going to enable someone like me to do very cool stuff.
Yeah. So let's talk about this, right? Because like your model, right? Your model of everything has a value, everything is tradable for everything else requires there to be a market in everything. So let's talk a little bit about market making. Like how do you, I think for a lot of people, the concept of token liquidity is kind of a bit is a bit of an abstract concept. So like, talk to me about what is market making? What does Keyrock do? And like, how do you think about what is important now and what's going to be important in the future?
I've been perfecting the answer to this question because I have to explain this to everybody we hire every week. So I've been answering this question very often. What is market making, correct? And when I ask people in our own company, people that join us, and what is market making? Majority of the answers that I get are, well, you provide liquidity in a market, you make a market efficient, and you enable trading, correct? It's just like, I think that's the outcome of what is market making, but it's not what it is. It is not what it is. It's like saying that a car is going from point A to point B. No, that's the outcome, correct? Movement is the result, but a car is a system that is propelled by an engine that has wheels and it propels itself through space, correct? That's a car. Right. So a market-making system is a system that starts from the very basic idea of understanding the price. What the fuck is the price? And what people don't realize is that the question is not as trivial as you would think. So if I would ask you, Piers, what's the price of Bitcoin? What would you say? Right. What's the price of Bitcoin?
I mean, my instant easy answer would be like whatever CoinGecko tells me it is.
Correct. So then, okay, let's have a look. So how does CoinGecko look at the price of Bitcoin? So they aggregate the price maybe every few minutes.
Right.
And they do that by looking at the price of multiple exchanges or like maybe 30 exchanges. Okay.
Yeah.
Okay, but is the price of Bitcoin 2 minutes ago valuable enough to understand the price of Bitcoin now? Is that really the price of Bitcoin? And is 1 cent or 2 cents or $1 going to make a big difference? The reality is that it does, correct? Because everything starts from what is the price. And the answer is as complex as you want it to be or as simple as you want it to be. You could say the price of Bitcoin is the price of Bitcoin in Binance on the bid. Or the price of Bitcoin in Binance on the bid minus the ask divided by 2. Okay? Mm-hmm. But you could go as complex as saying, okay, the price of Bitcoin needs to have a component of the intention of what's happening in the market, in the options market. If there are a lot of people buying options, does that affect the price of Bitcoin? If there are a lot of people selling futures, does that affect the price of Bitcoin? If people all of a sudden in Kraken start trading on big volume, is the amount traded affecting my understanding of the price? If in the last 1 minute, not a lot of people traded Bitcoin, but a minute before there was a lot of volume, is the price of a minute before more important than the price now? I don't know. And these questions are super complex. And that's actually where market making starts. Market making starts with this very basic idea, which we call in market making companies fair value. What the fuck is the fair value? Yeah. Just there. And once you have an idea of that, all of the models, all of the liquidity starts from that. Okay. And then the actual act of market making is a risk management model. Is how do I, from that understanding of the price, am I willing to let the market buy from me or sell against me at any given point in time in such a way that in average, I don't lose money? And then the answers to that last question is the actual market making. We ourselves answer that question in many different ways. We have very different models, very different ways of doing it. But ultimately, no matter how good the model is, if you don't know what the price is, all your decisions be wrong. Because the price is their price, correct? So a market maker, basically, they price assets. That's what they do. They take an asset, they price it. They understand what the price is. If you look at an AMM, a Uniswap, correct? They do that as well. It's just that they do it in a maybe semi-inefficient way, correct? Because what they do is that they say, okay, we provide prices in a range where we don't really know what the price is, and we let the market arbitrage us until we find the price. Fair enough, it works. Ultimate same result, you find the price. Maybe you have to pay for it a bit, in impermanent loss, but you find it, yeah? And that is plus or minus my explanation of what is market making. Of course, I could elaborate on how do we actually manage the risk, but...
It's a really interesting model, but like I think there's a really interesting component in it as well, which is that market making is the job of trying to be sufficiently ahead of the market to not get screwed by it. Like
In average,
you're
it's okay
on
to
average.
lose sometimes. On average,
It's okay to lose it on average. It's not to get screwed by it on average. Whereas what the Uniswap model is going, we don't know what the price is. We'll let the market work out what the price is, and we will just accept whatever the price is. And so I just on those two models, I do have a question of like when, and this is also for projects who are out there going, do I need a market maker? The beauty of a constant function market maker like Uniswap is that you can bootstrap liquidity into a token, right? You have no idea what the price is. The market has not yet decided what the price is. You just throw liquidity at the wall and you go, let's see what the market trades out at. At what point should someone be considering moving from a bootstrap liquidity model to we need a market maker, because now the bootstrap liquidity model is so inefficient that people are not actually wanting to put up with the impermanent loss. The volatility isn't high enough. The underlying potential for the asset is no longer like moving in ways that is unpredictable, and there's now sufficient market for this token that it makes sense to get a professional system in place to try and tighten up the spreads around spot and that kind of stuff.
Yeah. So this is a super interesting question, and it is slightly complex to understand this. So what I'll try to do is let's reduce complexity by assuming we're in a world where you have a market that only exists in one market, correct? If you look at Bitcoin is available in hundreds of markets, correct? So you can derive price from the intention that happens in the market. If you take an order book and this order book is trading an asset that does not exist anywhere else, it's only there, and then you have a liquidity pool that has an asset that does not exist anywhere else, actually they start having the same level of risk, correct? Because the task is not completely different. It's actually it starts to be more similar, correct? Price discovery is more complicated. How does the market maker know the price of something that doesn't exist anywhere else? And that's what we call a, let's say, low liquidity environment. So let's assume that we're talking about an asset that is not very liquid, that needs to be traded. Okay. Now, if you take the order book approach and the approach of the liquidity pool, you could argue that they're identical if you would use the Uniswap strategy in an order book. So you can actually, you can just look at Uniswap as one market making strategy, which is very simple, which is price goes up, I sell a little bit, price goes down, I buy a little bit. Yeah. In an order book, you could do that same strategy. You could deploy the same strategy in an order book and have the same result. But in an order book, you can have, let's say, a function that is slightly more complicated. So if you look at Uniswap as purely a function that derives prices, then the question is not should I use a liquidity pool, should I an order book, but is what function do I need, correct? If I could deploy a much more complex function in a decentralized system, maybe I could use it for more. And how do I understand the risk that I'm taking? So where I'm a token and I'm starting to make my market, I want to build my own liquidity pool. I can do it. That's fine. What's important is just for me to understand that I should understand this as a marketing cost or something like that. Because the reality of it is that, I don't know about you, but everybody that I know loses money on concentrated on UniV2 model formulas, correct? Like when this thing came to the market, everybody was super excited. Everybody got wrecked. Everybody loses money because it's a very bad algorithm. Concentrated liquidity is way better. But the thing is that concentrated liquidity is also very hard to make because it actually starts to look very similar to order books.
And you also have to actively manage it, right? Which is the same strategy you do with an order book because otherwise, if you just leave it there, it just comes back down and you're like, oh, I've just rebought what I sold.
You get wrecked. You get wrecked. So actually, everything indicates that the industry is moving in a direction where even in decentralized finance, the level of sophistication for the functions that we can deploy, it starts to increase, and it's needed to increase because everybody was just losing too much money. Everybody was just losing too much money. So it's just a matter of what is your objective. I know a lot of protocols that they come to us and say, hey, can you market make for us? And I try to understand where they are as a company, what's their cost structure, how much liquidity they want to put. And sometimes I just tell them, Mike, just go to Uniswap, make a pool, assume that you're going to lose 15,000 euro per month, and that's it.
Right.
Fine, keep it simple.
Right.
Yeah. But for other people, they're also looking for something different, correct? They're looking for multi-markets. They're looking for having fiat on-ramps. They're looking for a partner that can help them to accelerate adoption, right? And that's really the key. If you think that the adoption of your technology can work completely fine purely by using one pool where you maybe lose a little bit of money by doing so, that's fine. If you have a more maybe institutional grade product, most probably you need to do something else, because otherwise you're not going to generate adoption. And I think the most valuable thing for a company is to have adoption of their technology. That's what they should prioritize.
Right.
So I think that's really the answer of the question.
That's really interesting. And so, I mean, like you are unusual as a market maker in your attention, not just to centralized exchanges, but also to decentralized exchanges and DeFi. I'd love to sort of talk a little bit about your DeFi team.
Yeah, indeed. I mean, I think that we try to do a lot of cool, interesting things in that side. Be honest with you, I mean, the bulk of our revenue still comes from our let's say centralized exchange trading. Yeah. But we're very much aware that we need to work towards preparing ourselves for the future. So that's why we decided to take a piece of the company, you could say, and start doing a more iterative approach towards understanding what are the business models in which we need to interact and act in DeFi. And we've tried a lot of things. Some of the things we've lost money, some of the things are working well. But what's important for us is really the learning from that, correct? So like we've gone from testing and creating our own prototypes for NFT market making. We've done concentrated liquidity models for UniV3 and perp.com. We've done funding arbitrage. We used to use Drift V1 on Solana at the time. They kind of went busted, but now V2 is out, so we're restarting on that. We've done GMX and Mycelium.
Yeah.
And so on. So we actually tried to identify, okay, what are the things that are coming?
Yeah.
And we have a massive list. We have a list of like 15 potential strategies that we could deploy. And we still haven't had time to prototype them, but there's so many opportunities, correct? You could build liquidity strategies around bridging technologies and helping people to bridge between different chains. Right. There is a whole movement about real world assets that is starting. It's very interesting. Yep. There are super interesting protocols in everything that is interest rate swaps on chain.
Yeah.
I mean, this stuff is crazy, correct? You can use AMMs with concentrated models like UniV3 to trade fixed rates versus variable rates and create AMM interest rates models. Right. That's a super interesting business, correct? So we have like 15 things that we're going to be testing out. Among some of them going to be on NFTs. Some of them are going to be more, for example, options, interest rates. What's hard is to know what to prioritize. Right. We're starting with the basics, correct? We're starting, how do you manage effectively concentrated ranges on Uniswap? So that's what we've done. And now we understand how it works. But it was a big transition for a company like us, Craig. We know very well how order books work and how to trade on order books. All of a sudden, this new paradigm, you don't have order books anymore. Right. But if you think about it, it's very similar, correct? It's a function. So we now building everything that we need to do to be able to also accelerate in that direction.
Okay, and what's your team like? What are the key insights your team has discovered in their sort of dives into DeFi?
Man, give me a protocol that you want to know about. We just tested so much stuff.
But like,
cannot believe it.
You know, let's talk about the up and coming ones, right? So like GMX. What did you guys discover about GMX? Why is GMX growing so
extremely interesting. GMX is super interesting. GMX is super interesting because I don't know if you know this, but the idea of GMX is something that in traditional finance is actually rather common, which is that brokers, especially retail brokers, they have the idea that they don't need to actually back all users' trades against anything. Like if you look at a company like eToro, like back in the day, or I don't know if you ever used something like Plus 500 like 10 years ago.
Right.
Yeah. And what what you would see that the behaviors of these companies is that they analyze and they do data science on user behavior, and they basically take bets on their users.
Right.
They go and they say, these guys are doing leverage 5 trading on Bitcoin. Let's not back that trade. Let's just bet that they're going to lose the entire account. These guys just retards. They're going to lose all the money. And when I discovered I discovered this already like years ago, like in 2016. A broker was explaining me this stuff. Right. I was like, what? So yeah, and this was a company that used to sell white label broker solutions. Uh-huh. And they're explaining, yeah, this is how all brokers work. If a user is buying spot, no leverage, the broker is not going to take the risk to do so.
Right.
And maybe if you buy 1 Bitcoin, they're going to buy 1 Bitcoin from the market. So that's good. But if they see that you're doing some degen trading, maybe they're just going to bet that you're going to lose money.
Right.
And that's how they play their game. Their game is basically the idea that in the long term, traders, the average of traders lose.
Yeah.
Correct?
Yeah.
Now this goes into the blockchain and makes it super accessible, not only for a broker to make money, but for you to make money.
Right.
What is more interesting, and this is what we've discovered, is that not only you can do that, but if you want, because everything is on chain, you can decompose the parts of it. And you don't have to go on autopilot on GMX. You could decide, maybe we do our own analysis on the traders that are on GMX, and maybe we hedge some traders that we dislike their positions of. Right? So it's super interesting because you can take as much risk as you want. So you can run a liquidity model that is very low risk or very high risk. You can decide. So you could transform GMX into a very low risk model, or go all degen and go super long Bitcoin as well, just on how you manage your risk.
That's really interesting. There's a similar model in betting as well. I was talking to someone who ran a betting company, and they do a similar thing, which is basically if you have a betting company that has a marketplace, what they do is they have 2 books, and they have the book of bettors who they don't take positions against because they consistently win, and they have their they have the book of bettors that the company will take the position against because they often lose. And they basically this is how they make money, is they go, okay, has just deposited, is already doing like what's it called, sequence betting, where you have a one bet that's reliant on the outcome of another bet that's reliant on the outcome of another bet, which is essentially the same thing as leverage, but in the betting world.
Yeah. Interesting, actually. I didn't know that about the betting world, but I can imagine, of course, they would do something similar.
Yeah. But now what you're saying with GMX is they're basically making a protocol for sophisticated capital providers on one side to provide to then decide what book they want against the market that's coming in and using that. And as a result, you get very efficient price discovery, and you also get the ability to be much more. You get the ability to now choose which traders you're taking a position against from a sophisticated capital point of view.
If you would want to, correct? I believe GMX. I don't remember exactly how much is on the TVL of the contract. Let's say it's 500 million. Might be more by now, honestly. Might be more by now. But let's say it's 500 million. I truly believe from the 500 million, the big majority is people doing simple shit, correct? They put money and they're just betting that in average traders will lose money. And what is super interesting is that during the first, let's say, 12 months of the protocol, it worked like a clock. Like traders just kept on losing money. It was so insane. It was so easy. Like they just kept on losing money. And everybody that put money there, 500 million, they were just making money every day. Fantastic, right? The market bottomed after FTX, and then from around January, end of December, it kind of like everybody realized that the market bottomed somehow, correct? Right. And the fucking traders just started to win. And they've been winning consistently. The guys have been winning consistently for about 3 months now.
Right.
It's a bit dangerous, correct? But the thing is that majority of people just believe in the mantra of traders would lose money. So I think that from the 500 million, the big majority of people would do simple stuff. But again, what's interesting is that it enables you to do more sophisticated things if you would want. We are doing something more sophisticated. We're not just putting money on the protocol and forgetting about it. Yeah.
Yeah.
So we have managed to, on GMX, build a strategy that actually made money the last 3 months consistently.
Nice.
That's pretty good.
Nice.
Just because we knew how to offset some of the risk in the market. Yeah. And I would assume some people are going to do it. I mean,
Yeah. I think so. What are you excited that's coming down the road? Like, I mean, we talked a little bit about carbon, right? So you like carbon. What else are you sort of looking forward to that's coming down the road in the DeFi world?
Carbon's great, huh? Carbon's super cool. There is just so much innovation. Like I am amazed about the amount of innovation that is going on at the moment. It's for a bear market, especially, it's crazy. Like this is not like 2018, correct? Like the amount of people building cool new stuff it's unparalleled. It's crazy. So
I remember 2018. Yeah. 2018
not
was like it was dead. Like everyone been like, we thought tokenization was the future. We were wrong. This is bullshit. But now, like the serious people are building, and they're building really cool stuff.
They build good stuff. So the things that I'm looking at that are very interesting, I've been looking at a lot of derivative protocols. So I would consider GMX a derivative, correct? I'm personally very, very excited about perp.com. Like, I don't know if you looked into it, but it's also
a while ago. But I when I looked at it originally, they were using like a virtual AMM system, and the virtual AMM system pricing model didn't make sense to me. Like there was like a big gap in how they'd done the maths.
It was
similar. So I left it.
It was similar to what Drift was doing as well. But the problem is that they were using a virtual AMM with a UniV2 backend, correct?
Yeah.
That was dumb because fundamentally UniV2 doesn't make any sense, you see? But their new version is so good. It's so good.
Is it? Okay.
It's very good. It's very cool. Like I'll just explain you, like super simple. You can provide liquidity on something that basically is built on top of UniV3. So let's say you want to provide liquidity on a range, but you do it synthetic. So you just go to the protocol, you stake, let's say 10,000 USD as collateral, and they let you open a position 50% ETH, 50% USD synthetic as a perp in the range that you want. So you could just basically do what you used to do on FTX. You can just put as collateral 10,000 and then market make perps on concentrated ranges on 15 assets without having the assets. It's very cool.
That's really cool. Yeah, I mean, I've always said derivatives are going to be huge, but now you're just opening. Like, I didn't really understand how they were going to be huge, but like what you've just said is like open this like little box in my head, and I'm going, okay. So it's basically derivatives against decentralized marketplaces, decentralized exchanges, and making those decentralized exchange pricing models part of how the perpetuals, how the derivatives models work. I need to jump into perp more. That sounds
that was cool. Very cool. And in terms of like more early stage stuff, like we've been looking at super interesting stuff in terms of like OTC technology for options, for example, up and coming, very cool. There is some other stuff. These guys from that are building an order book system that is composable. So it's an order book, and you can place a limit order, but it can be fulfilled with a flash loan, for example. So you place a limit order, but you don't actually have to have the money. It's just an intention, and once somebody takes it, you could fulfill it with whatever. You just need to deliver it at the time.
Yeah. That makes sense. I mean, that makes sense because then you can have multiple positions.
Exactly. So I think everything that contributes towards capital efficiency is what DeFi needs right now. Like if we get capital efficiency, it's very good. One last one, which I'm super excited about. I invested in this company, disclosure. It's called Arcadia Finance. Very, very early stage. They just launched last week, and they do cross-protocol, cross-margin leverage. So you have a vault where you put money, and you can basically use that as a cross-margin account between different protocols and take leverage to trade. So you can, for example, do liquidity provision on Uniswap, leverage 10 by a money market.
It's sort of
composable.
Can I think of it like prime brokerage?
It's
a little.
That was my point, Craig. So for a very long time, I kept on preaching, like for the last 3 years, that the moment somebody would invent a prime broker for crypto that actually works, I would invest in it. I met these guys a couple of weeks back, and they just showed me this stuff. I was like, we're doing this, guys.
Yeah, it's prime brokerage investing in that.
We're doing
But
this
yeah,
thing.
no, I mean
It's
that
great.
makes sense. Like going from I have to have specific collateral for types for a specific position to just being like, I have all of this collateral and now I can take positions on the basis of this portfolio of collateral. That just makes so much more sense.
So imagine this one, and this is what I'm trying to convince these guys to build with me. I'm trying to convince them that they make me a vault where they allow me to put my GLP tokens, which is the liquidity pool token from GMX, which is basically a diversified basket of Bitcoin, ETH, and stable coins, as collateral to then go and open concentrated ranges on Uniswap.
Yeah, 100%.
100%, correct?
Yes, 100%. And this is where the interesting stuff is going to come from. Is like
I think so.
Liquidity pool tokens then being used as collateral elsewhere is 100% the route that was
capital efficiency, composability is the king. Great protocols coming up in the derivatives space is super interesting. Even of the NFT, I've seen guys pitching me NFT derivatives in the last couple of weeks. And that I was like, fuck, man. This is start to get like, I don't know if you've seen this shit like this. These guys, like, they made a Bored Apes Yacht Club perpetual. So it's like so it's a perp, like literally a perp of the collection.
Yeah, that's great. Then you can short the fucking Bored Apes.
Yeah. They had a lot of volume at the beginning, so like wouldn't be surprised if people were trying to short the stupid apes like doing that.
It's like, Juan, it's been such a pleasure talking with you. We're gonna have to wrap it up for now. But if people want to like get in touch with Keyrock, if there's projects out there who want a market maker, like what's the best way of getting in touch with you guys?
Yeah, no, absolutely. I mean, look, you can also add me on Twitter. So it's Juan-David Mendieta. Otherwise, you can reach out to us. Our website is very open. You can actually fulfill the form there. We do get in contact with people when they contact us. I mean, not super hard to get in contact, to be honest. We're also almost at every crypto conference. So you can shoot us a Telegram as well. Otherwise, if they know you, they can ask you what's my contact, and you can send it to them as well. It's good.
Sounds good.
Okay. Thank you, Piers.
Awesome.
Very good conversation.
Thank you so much. Have a wonderful day.
You too, man. Cheers.
You better call on these guys. I'm going radical. I'm going Radix. I'm going radical. I'm going Radix. Hyperspeed DeFi, never on a decline. Building the future, I feel like a savage.